Welcome to Elevate Your Health with Leia Ryan. If you care about your health, you're in the right place. Get ready for success stories, listen to solutions for your life, and real stories that will move you and inspire you to live healthier today. Experience what it means to help improve the quality of life within you and around you. Grab your drink of choice, take notes, and let's elevate the environments together. Cheryl, thank you so much for being here today. I am so excited to have you on my first podcast.
Awesome.
So I have a question. What made you say yes to me?
Well, I've gotten to know you and I'm like, I need to get to know you better. And I just thought this would be a great opportunity for us to get to know each other. And I've got some opportunities for you to come onto my show as well. So just thought it'd be great. Yes.
Thank you so much. Well, you know what? You are in the financial arena.
Yes.
What made you choose that arena to be in, first of all?
Okay. Well, I have a little backstory. So I'm a Phoenician. I'm from Arizona. Not that has anything to do with it, but being from here kind of helps. But I was actually in the restaurant industry for several years. That was 16 years, 13 in management. My last position was at the Scottsdale Princess. And I have to say, being in the restaurant industry, you learn how to multitask. You learn how to, right?
Yes.
And well, if you think about it, we're always helping people with their food, and that's what they're going to eat. And so we're always accommodating. How can we help you? So I learned those skills early on in my life, being in the restaurant industry. And then, after I got married and then went into the network marketing industry, and then I got divorced, found my way into the mortgage industry. But I was able to use the skills that I learned from the restaurant industry and apply it to being in the mortgage industry, as far as living in the solution, not the problem, as far as always getting conditions for underwriters and that type of thing. So, but I love what I do. And my dad was in the mortgage industry. And so I kind of learned a little bit from him. And so it was just fun. 2002 is when I got into the mortgage industry. So it's been a hot minute.
It has been a hot minute, and people love you. So that's the main thing. It's like people meet you. When I first met you, I'm like, oh my gosh, she's so awesome, that kind of thing. So
thank you.
Okay, I have a question for you.
Okay.
Reverse mortgage. Okay. I have no idea what it is, what it means, anything. Let's share.
Okay. So like I said, I got into the industry 2002. And by the way, I'm with Barrett Financial, and we're licensed in all states except for New York. Okay. And then I'm personally licensed in Oregon, California, Arizona, Nevada, and Texas.
Impressive.
But I can still help other people in other states. But so I've been doing mortgages for that long. And then I had 3 reverse mortgages fall into my lap. And I didn't even know what it was. This lady came up to me. She's like, hey, do you do reverse mortgages? I'm like, absolutely. Yeah. And I walked into my manager's office. I'm like, hey, dude, we do reverse mortgages? And so that's how I fell into reverse mortgages. And that's almost 10 years ago.
Wow.
And I believe in them so much. Like 5 years ago, my mom, I got off the phone. I was at her house. I was talking to somebody about a reverse mortgage. And she's like, I think I need to do this. So I believe in them so much that my mom even has one. But what a reverse mortgage is, to answer your question, is, think about it this way. When you have a 30-year fixed mortgage, you're making a payment every month, and your balance is going down ever so slightly, but it's going down every month. With a reverse mortgage, you don't have to have a loan. You could have a free and clear house, or if you have a mortgage on your house, we would pay off that existing mortgage.
Okay.
And then now that extinguishes no more monthly payment with that bank. Now you have a reverse mortgage from that balance, right?
Okay.
And instead of your balance going down every month, it's going up in reverse because you're not required to make a mortgage payment each month. So we do a low loan to value. The value of the home is here. The loan balance is down here. So there's a lot of equity. So each month there's interest being added to the balance.
Makes sense.
Okay.
Yeah.
But we don't want it to go upside down. So we do have mortgage insurance in place. Okay. But we give a low loan to value that allows people to pay off their existing loan if they have one, maybe still have a line of credit that they can use. Or if they have a house free and clear, which I deal with that also, they can just use that as a line of credit for different things. So that's the basic on how it works. Does that make sense?
It totally does. Is there an age?
Yes. So it's a government federally insured loan. So one person in the household needs to be 62, just
Okay.
one. So that first example I gave you, I went to the presentation and it was the 80-year-old mom, the son, the daughter-in-law, and the daughter, my manager on a speakerphone in the middle because I didn't know what I was doing, right?
Yeah.
And so we went through the presentation, went over their exact numbers. The son said, we need to call you with some questions tomorrow. And I said, okay. He calls me up the next day. He's like, okay, we want to get started with mom after I overcame his questions and objections and, understandings. And then he said, and my wife and I want to do this too. But she was 64 and he was 58. So we overcame the 62-year age. And then the numbers are based off the value of the house, the age of the youngest borrower,
Okay.
and then the interest rate, because the loan is good until you're 150 years old.
What?
So we go off the age of the youngest borrower because they're going to be here possibly a little longer. So that's how we create that loan balance that we give to you. So that's how that works.
That is amazing. So, Cheryl, I've learned a lot here already. But
information overload,
yeah,
right?
right. But also there's been people like, oh, you don't want a reverse mortgage. What are the myths about reverse mortgages?
So the biggest myth is that people think that the bank owns your home.
Okay.
The bank does not own your home. You own your home just like you would on a 30-year fix. You have a lien. We would be in first lien position. And it shows that on your title. So the house is collateral just like it is on a 30-year fix. And you still own your home, or it's in the name of your trust. So that's one of the biggest ones. And I've even had people come to me and they say, well, I've got somebody and they don't have any beneficiaries or any heirs. I'm like, it doesn't matter if you do or not, because even the heirs or beneficiaries, the adult kids, they come to me, they're like, this sounds too good to be true. What's the catch?
Yes.
And I'm like, well, the catch is that maybe your inheritance isn't here, but maybe it's here because your parents or whomever have decided to access the equity in their home. They're cracking up the piggy bank to enjoy themselves. And now your inheritance isn't as much. They're like, that's okay. We have our own retirement. So that's how that works. So
what if a house, so I'm thinking out loud here to myself, what if a house has a reverse mortgage on it already? That gets a little complicated, doesn't it?
Well, as far as what? I mean, are they going to sell the house?
Correct.
Are they trying to refinance the house? Because you can actually refinance a reverse mortgage.
Oh.
People don't know that.
Yes. No.
You can actually, and I actually did it almost 4 times for one of my clients.
Okay.
Because he was a pastor. He's like getting ready to retire. The values were going up. He was aging up. We were able to have what's called a benefit to the borrower. You have to wait 12 months, but we were able to refinance him over and over to take more money out of his house to enjoy. And there's another product besides the government federally insured loan with HECM or reverse mortgage.
Okay.
We have a proprietary product where that one goes down to 55 years of age and up to $4 million. So we have a lot of room. So I've got people in $1 million homes use this as a wealth building tool to reassess their money. And then we have people that are living check to check. So it's not a last resort either. And that's like a big myth out there as well.
So let's say you have a home and let's say it's $1 million net worth. And let's say that you're like, how can I put that money to work? What does that look like?
Well, so depending on the age of the borrower.
Yes. Let's say you're 63 years old.
Well, so that I can't calculate that in my head. It's all algorithms and everything. And
Sure.
they're going to calculate it. And just for compliance purposes, I can't do that.
Yeah.
But what would happen is I have a situation like this right now. And so depending on the age, we have her loan amount. And then they just access the money however they want. They can get a new roof on their house, in-home health care. I've got people that are using the house to pay for housing for somebody who has to go into memory care so they can leave the money under management. Because if you think about it, when we retire, we have 3 buckets. We've got our Social Security and our pension if we have one. Mm-hmm. We have another bucket with 401ks and IRAs if we have it.
Yeah.
And then we have our house.
Right.
So why not use the house to supplement our income, keep the money under management? That's why financial advisors love us, because we're helping them grow their money.
Right.
This person who has somebody going into memory care, we're keeping that money left for her. So that way the house is paying for his housing. She doesn't have to make a monthly mortgage payment, and they're keeping money under management. So I don't know if that answers your question.
It totally does.
It's just
very
a different
brilliant
way of using. So you've been putting into the piggy bank of your house all these years.
Yeah.
Now let's crack it open and use it. $14+ trillion of equity out there. Why aren't we using it?
Well, and that's very strategic. I mean,
Yes.
but you have to be because there's so many rules that have changed and it's hard to keep up with rules. I mean, so many different things. So thank God for people like you that do keep up, that it can really tailor it to your client.
Yes.
That's fantastic. What are this is just off the charts here. What is something that people have no idea about you?
About me?
Yes.
Well, I don't know. Are you talking personally or business or what are you talking
Whatever
about?
you want to share.
Well, it's a couple of things.
Okay.
I have traveled to all 50 states before I was 50.
Seriously? Wow.
And I am a Phoenician. And this is why I'm a little excited today because I just found out, and I've never done this before, I'm actually going to hike the Grand Canyon next month. So I've been wanting to do that. I'm like, I just kind of put it out there. And then all of a sudden, somebody wanted me to help them out because they were going, like, can you watch my dog? We're going to go hike the canyon. Now, her significant other can't go. She's like, and I had just put it out there. I said, hey, if you ever go again, I'd be interested. And she's like, he can't go. Do you want to go? And I'm like, I just found this out. So that's kind of fun for me today. Well, and I'm nervous. I'm excitedly nervous at the same time because,
of course, because you've never done it and you're going to go out and do it. And you know what? That's what relationships are. I'm sure your relationships with so many people have brought you so much happiness and just working with. And I think it pours out of your heart, just talking with you that you really do want to help people. And you really do want to make it an easier venue, an easier lane for them in life because life gets busy. Life gets complicated.
Yes.
So thank you for being who you are.
Thank you. Well, and thank you for saying that. But I want to share one other story with you, if that's okay.
Yes.
I had somebody come to me from my radio show. He called me up and he has a free and clear house. He's 81 years old. And he's just like, okay, I think this reverse mortgage might be good for me. And I went over and did all his numbers and we talked about things. He goes, okay, I'm just going to be candid with you. And I said, okay. He said, I might want to move out of here and move into I want to move into a 55 plus community. So I have activity and socialization.
Nice.
And he's a trainer. He's a fitness trainer. He's been training people and it's all about the gym. So I said, you know what? I said, well, maybe we shouldn't do the reverse mortgage on this house, but you can actually buy a house with a reverse mortgage. He's like, you can? I said, yeah, we can take the net proceeds from this house and, dump it into the new house.
Yeah.
You tell me how much you have that available.
Yeah.
I will work the numbers backwards and tell you how much you can buy. And then you have the equity in the new home and not have to make a mortgage payment. And I was telling him about this place, this new community. I go, I've been there to help my friends, and they've got musical bingo. They've got, the gym, they have the great country club to go dancing at. And he's like getting all excited. So he might end up not doing his current home and then purchasing a home with a reverse mortgage and not have monthly mortgage payments. You're only responsible for, this is really important, you're only responsible for your property taxes, your homeowner's insurance, and your HOA if you have one. So, and the upkeep of the house. So that's what people would be responsible for. And we do a 2-year look back to make sure that people have been paying those items on time. So credit score even isn't a big deal because we don't do debt to income ratio. We do residual income. So it's just an easier way to get qualified because we do a financial assessment. So there's just a lot of great stuff. And I've helped so many people and I love what I do. And, I had an 85-year-old come to me and she's like, I want to do this, pay off my loan and go travel. And she was on a cruise in December because she was able to do this loan. Yeah.
Bless her heart.
Yeah.
And, I think sometimes we have no idea because people don't talk about their finances. People don't talk about this stuff. But like this lady that just took this cruise at 85 years old, what a blessing.
Right?
I mean, and then this gentleman that you're helping tailor really his future.
Yes.
I mean, you're a big key part of that.
Yes.
So you are so good at what you do. And it just, as I said, it pours out of you. So thank you so much. This has just been a delight for me. So another question.
Okay.
What about second mortgages?
Okay. So there is a product out there. People don't know about it. You can actually have a reverse mortgage in second lien position. So there are people out there that have those low interest rate first mortgages.
Which people love.
Yes. So they can continue to make that payment, but access the equity in their home and have a second mortgage as a reverse mortgage in place. No monthly mortgage payment. So I had a gentleman come to me. He's like, Cheryl, you have to help me out. I said, okay, what's going on?
Yeah.
So he had a first and a second. He had that low interest rate first, and then he had a second loan that was killing him on the payment.
Sure.
And so we were able to pay off that first or that second loan.
one. Okay.
We paid that off.
So that big payment's gone now.
Yes.
Okay.
No more payment on that.
Yeah.
And then he was also had extra money to do whatever he wanted with it. He could travel. He could get a new roof. He could whatever he wanted to do.
Yeah.
Get new. People buy a car with this money.
Right.
I had a lady buy a car. I had a lady pay off $100,000 worth of credit card debt.
My
the stories are
goodness.
endless. Yes. Yes.
That's amazing. And the thing is like credit card debt, that's scary. That's very scary. And that's super, super expensive.
Yeah,
And
30% interest.
Oh,
or 28 or whatever
God,
she was
whatever.
at. $100,000. Yeah, she was just paying interest.
Wow.
Yeah, so she sleeps better at night now.
Of course
Yeah.
she does.
She was pawning stuff to make the payments. It was so
Bless her
sad.
heart.
It was so sad.
So when you get that equity out, which is so awesome, and I'm just thinking outside here, our property values have only gone up.
Right, right. So what are you asking?
Well, I mean, so let's say we take this much equity out
Okay,
and our property goes up.
okay.
And so when it comes time for us to sell, I'm just trying to do the numbers on my, go ahead.
Okay, so let me just give you an example. So when we do the loan, it's whatever the value of the house is. So that's what we do the numbers on.
Gotcha.
Now, when it comes time, it has to be your primary residence.
Okay.
Okay. So if somebody decides to move out,
Mhm.
now people break hips, break bones, they go into rehab. It's
Sure.
still their primary residence because they're coming back home,
Sure.
even if they're out for however many months, right?
Yeah.
But when the day comes that they either want to go live with family, go live in an assisted living or independent living, and they no longer have that as their primary, we have to do something with the loan. So either they passed away or they move out.
Okay.
Now, if they've passed away, let's do that one.
Sure.
If they have passed away, the beneficiaries have two options.
Okay.
Because the loan has to come out of the deceased person's name. So the beneficiaries can either refinance the house into their own name.
So they could keep the house.
Correct. I actually
Okay.
had a gentleman, mom was a nurse, she was still working, and the young adult was like, hey, can I make the payment? Because you get a statement in the mail.
Sure.
It's not a bill. It says,
Yeah.
this is not a bill. But he said, can I make the payment each month
Yeah.
on the interest if I wanted to? And I
Right.
said, absolutely. The bank will always take your money, right?
Right.
And so he looked at his mom and he said, Mom, love you dearly, but when you pass away, I'm going to refinance this house
Yes.
and rent it out. So that's one option is he can refinance a house, or the adult children, the beneficiaries, whoever, have up to a year to grieve, to purge, and get the
Mm.
house ready for sale.
Okay.
Now, in that 12 months, they're not making payments either. And in those 12 months, they are getting the house prepared. Now, if we're in a market like we are today and the value is here and the loan balance is here when they sell, it's just like a normal transaction.
Sure.
You pay off the bank with the interest rate, you pay the realtor fees and closing costs.
Yes.
Whatever's left over, the beneficiaries get. If, God forbid, we have another 2008 and we're upside down
Yes.
and the loan is here and the value is here,
Right.
it's a non-recourse loan. So
So no one's responsible?
no, the mortgage insurance pays the difference, whether it's a dollar, 50,000, 100,000, 20,000, whatever it is. The bank doesn't come after the borrower or the beneficiaries. It's a non-recourse loan. So that's where we get a bad rap because it is an expensive loan.
Yeah.
It's off the value of the house. We have a percentage that we use. And then it's a one-time line item in the closing cost.
Mhm.
And once I explain to them, every family has to put into the mortgage insurance bucket.
Yeah.
They get it and they see the numbers and they're like, okay, because it's rolled into the closing costs like it would be on a 30-year fix if you
Sure.
refinance and roll that in. So
That is amazing.
I know it's the best kept
information.
secret.
It really is the
It
best
really
kept
is.
secret.
And people can take the money out to purchase the products that you
Right.
have for people for their
Yes. Health
home.
and wellness.
Yes.
Yes.
Well, it is. It's so
Yes,
true.
indeed.
Right?
Yes.
They can breathe better, drink better,
Yes.
laundry, all the stuff.
We want to live longer and live healthier.
Yes. So this
Amen.
is a way that people can get access to your products as well.
Indeed.
And not pay for it.
Right, there you go. Awesome. Well, thank you so much, Cheryl. It's just been a delight. And like I said, I really got educated. And for those of you folks that are listening to this amazing podcast and educational information, if you have any questions, this is the gal you call, Miss Cheryl.
So I'm going to give my information.
Please.
Is that all right?
Yes.
So I can be reached at 480-817-4324 or Reverse Mortgage and Beyond. And then my email address is cheryls@barrettfinancial.com.